I would think so, viewed from a couple of perspectives. One is the coverage ratios themselves are quite healthy. I think we are closer to 80% inclusive of the written off accounts, and without that around 68%. So that is pretty good. The second thing is that there aren't any real big accounts that should trouble us from here onwards. And third, we are hoping the recovery cycles will also open up. So viewed in these perspective, the position looks quite.
But what about IL&FS? What about the ADAG names? What about Diwan Housing? Would you have to provision more for these accounts?
So we can go through each one of these accounts. In respect of, in the last quarter, we had taken a sizable increase in our provision relating to our telecom exposure. And that kind of answers one of the questions you asked me, one part of the question you asked me. So as far as IL&FS is concerned, we have a large exposure when we add all the three banks together. It's about 5,700 crores or thereabouts, out of which about 2,300 or thereabout is to the finance companies, and the balance are to various SPVs. The position with respect to the SPVs is fairly comfortable. These are all vehicles that the project has got completed. There are revenue streams. We are secured creditors. So while the assets are classified as red, yellow, and green, and you may have to take some provision on yellow, those are marked yellow or red. But our position as secured creditors leaves us fairly in a comfortable position. As far as the holding company exposure is concerned, more provisions would necessarily be required. But in the scheme of things, with lots of pluses and minuses, that amount of provision can well be absorbed by us in normal course.
Could you quantify what is the exposure now as of
Well, the one that we're discussing about, which is what one can call as a troubled exposure, which is a lending to the ITNL company and the two finance companies, the holding company and the finance companies, in the order of 2,300 or 2,400 crores. We have a 25% coverage. And so whatever is left of it, or whatever more needs to be taken, would be absorbed in normal course. So there's nothing.
In just one more quarter?
Well, it's 1 or 2 or 3 quarters, depending upon when these assets come for review. There is a periodicity at which these limits to the provisions are reviewed. At that point of time, it will be taken.
Okay. So in light of that, what can you guide on your asset quality? So
we have actually effectively bringing together three banks together when we look at asset quality for next year, which is different from if we were only looking at the portfolio I know better, which is a Bank of Baroda portfolio. If it had been on its own course, I would think our net NPA number would have been less than 2.5%. We were 5.42 when we started. We are 3.3. The absolute number of NPA at 15,000 crores is the lowest we have got in many quarters. So I would have seen naturally it would have been below 2.5. But I think with the consolidated entity and giving the differences in the quality of the assets, and also to provide for some insulation for things we may not know better, I think we're looking at something in the region of 2.75% as net NPA number as we go to the end of the year. But I wouldn't be surprised if the actual numbers are much better than that.
Okay. So at the merged level, now that you're three, not just standalone BOB, when do you think you can become profitable?
We'll be profitable from Q1.
Q1. Just about break even.
We should be in profit.
Okay, that's great. Also, I know you're looking at raising about 11,900 crore rupees via equity, 7,500 crore rupees via bonds. How is it that you plan to utilize this money? That's an enabling resolution.
No, I don't think we have 11,900 crores by way of equity. What we have got is 5,000 crores or thereabouts from the government.
But that will be deployed for the merger process.
That's all gone. I mean, it all came before March, let's put it this way. Going forward, I think from the way it looks, we probably are raising about 1,500 crores to the employee stock purchase plans. We're expecting to raise maybe a little bit more than 1,500 crores with respect to 81. Then any further growth of capital would require us to be able to demonstrate a couple of good quarters and then go back to the broader market and come with a QIP, which I think would be possible in third and fourth quarter of this year.
How sizable would the QIP be?
Let us see how it is, but if I had to take a combined net worth of the firm of 50,000 crores, a little bit more than that, even a 10% of dilution would mean you would raise 5,000 crores.
Okay. I recall when...
But then I'm also looking at the fact that we would be a reasonably good organic profit coming into this financial year. We're also looking at the fact that there is a divergence between the growth in asset and the growth in risk-weighted asset. Last year, we had a growth of 18.75% on an average basis with respect to the balance sheet. And if you were to look on a terminal-to-terminal basis, it was around 13%. but our RWA, which is the amount of assets for respect to which you additionally need to provide capital, was only 1%. So there is a divergence. So better quality asset means for the same amount of money you need less capital, and capital optimization.
So 5,000 crore rupees is what you're saying.
I think with that, no, I would think we have an ability to continue to grow in the way we want with the 2 rounds of capital, the 81 and the employee stock plan. Thereafter, it's a couple of quarters from there onwards. By the way the accounting policies work, we should be able to accrue the organic profit during the course of this year. An additional 5,000 crores of capital would help us to further strengthen our balance sheet, but our ability to fund the customer is not predicated on that.
I remember when I spoke with you on April 1st, which is when the merger actually took place, you said that, the day that anyone from Dena and Vijaya stop calling them that they are from Dena and Vijaya and they say I'm from BOP, that's when the merger would be complete. How are the synergies shaping up?
Early days, but a couple of good things. I think we've been able to get a common organization together, and in a manner that, in general, all of us are quite pleased with the way we are put it together. So that's gone on, but it's only 45 days. It's quite early. We are making some good progress with respect to the integration from a technology perspective. A lot of issues with a lot of aspects with respect to human resource related activities have got completed, whether it is compensation structure, etc. There are certain other areas we need to navigate through, which is what would be the new transfer policy, what would be the new promotion policies. Discussions are underway. I don't see too much of an issue. In the final conclusion, the pace at which we can merge is going to be dependent upon our technology. How do we get into a single core banking database, and that, depending on a variety of factors, could take anything from 12 to 18 months. That said, we're trying to find workarounds by which we could be able to get incremental customer to a single, the Finacle 10 database, and then wait for the existing customers to voluntarily move to the new platform as a workaround to the deployment, the traditional way of getting into the common single database by converging all customers through technology processes. So both are underway, but I think it's a 12 to 18 months exercise.
And you think HR is the only challenge? That's the key challenge?
No, I think the technology is a larger challenge. Okay. The HR aspects of it have been, by and large, addressed so far.
Okay. I also want to talk about, the strong mandate from election 2019 that's been handed out. And a lot of people are now talking that the government, the need of the hour is privatization, consolidation within the banking industry. SBI and you have been the first within banks to consolidate. Do you really think that's an easy process? Do you really think that is what the government needs to do and that's needed for the banking industry?
Well, the consolidation aspect has been something that has been in discussion since the time the Narasimhan Committee started the work in the 90s. So there is a school of thought we could work with lesser number of stronger banks. Sure. And so that point of view remains. To the extent that the first phase of this consolidation process, starting with SBI then and now with us, has moved on smoothly, the argument in terms of being able to execute on a consolidation plan in an efficient way stands further reaffirmed. So I really can't think for the government or talk for the government. But I would say this much, that the notion that we should have a fewer number of bigger banks has been something that has been around for some time. The consolidation of Vijaya, Dena and Bank of Baroda was the first step in the process. But the agenda is probably more deeper than that, and for that you need to talk to somebody else, not me.
Okay. Well, you would recommend that?
Well, I would say to you this way, that we need a variety of institutions, financial institutions, for this market to be vibrant. We need the small banks, we need the digital-only banks, we need the non-bank finance companies of various sorts, we need the big banks, we need all of them. But clearly the country needs also some large-scale bank, large-size bank, and the consolidation helps in achieving that goal. But usually I like to stay off from this discussion. In the job that I am in, it's like being a horse on a racing track. You have your blinkers on either side, and you focus on the course. And what we are focused on is getting this integration done and getting this merged entity to be on the top quartile or the top decile of the peer group, rather than merely talking in terms of...
Has it been easy for the horse to win the race?
Well, we have moved on the track quite well. There are times when we have slowed down. It has its pluses and minuses, but I think by and large we are well positioned today to be able to achieve the goals that we set ourselves to.